one of the things that I've learned is that I need to be more dispassionate about my trades.
Expectation has risen. Am I doing that? That'd be that way. Yeah, there we go. That's better. That was a test, Pega, and you have passed with flying colours. Today, we're going to run through a recap, basically, of what we've done. Then we're going to go through your portfolio. Then we're going to look at what are the alternatives to trading stocks. We're going to look at foreign exchange and bonds and how we trade those on the platform. Then we're going to go on to have a quick look at macroeconomics. And then we're going to do today's trades of the week. So the recap, right? Do you remember week one was very simple. Week one was just a sort of introduction.
About all the reasons that I should be trading. So that was about creating wealth.
Now, week two was how to short stocks. Remember, we were throwing the rugby ball around and we looked at pair trades. We put on EasyJet against Delta Airlines. The biggest trading mistakes were in week three, and that was looking at when you're going to put the trade on, we need to know if there's earnings coming out. Have we got the size right? Have we got enough margin room? All those kind of things. And we put on retailers. Do you remember? We put on...
It was Next and Kingfisher.
Exactly right. Kingfisher being B&Q. And then finally, in week four, it was using valuation, the basics of valuation and quantitative research, which is, we use the tip rank system, which is my favorite tool on the IG platform. Absolutely love that. So, to today, my dear. And I did say we were going to look over that portfolio. It's just been a bit tricky, hasn't it?
I have wanted to cut at some point, but we agreed we would keep going.
Obviously, the most important thing in risk management is position management and having a stop loss and having a take profit level, okay? Now, I wanted to really get that across and really drive that home. So this is actually perfect that we've lost a bit of money. You'll see that Delta Airlines should have been gone a long time ago, right? Because that's a £5,000 position and we're losing 1,200. It's been horrific.
And it's most of the loss is from Delta.
Pretty much. If we took that out, you know, you'd be pretty much flat. Okay, there's a little bit there from Intercontinental as well. You've been unlucky there. But you're right, the vast majority has been from Delta against EasyJet. Now, we would have been stopped out of that if we had been disciplined and taken the stop loss. But haven't let you do that yet. Because next week, we're going to do a full look at stop losses, taking profit. How do you get that risk to reward ratio?
Okay.
Okay. But for now, we're running these 8 positions, and I'm very happy with the way that it's going. Forgetting the P&L.
Learning a lot.
You're learning a lot, and I'm very glad to hear you say that. So a reminder of what those trades are.
Yeah, so the first pair was EasyJet and Delta, and I think that, you know, some things have happened in the macroeconomic sense. In the US, we have a new president-elect, and that, I think, has really helped some stocks in particular.
The reaction in the dollar has been absolutely incredible.
Yeah.
Right? We've seen this huge dollar strength. If we have a look against the pound here, right, since the election result. So that's a daily chart, right? Now the GBP dollar, which I'm sure you look at, has fallen from 134 down to, then we had the budget in the UK. So you're talking about macroeconomic occurrences, right? This is where the budget was here. We dropped down to that 129 level. And then that's been exacerbated in that move by the US election. In 2 weeks' time, we're going to be looking at technical analysis.
Okay.
Right? But as you can see from this, from a simple technical analysis like the RSI, right? I'll give you a quick introduction to it here. What this gives us is an idea of how the momentum's been and oversold or overbought. And if this indicator here is below 30, that's regarded as the instrument being oversold.
Okay.
Okay. So how do you feel about putting on a small reversal trade of the pound against the dollar?
Well, I think that this is a good lesson because up until now, I think maybe some of the bets that we made were a little bit emotional in nature. So they were things that were maybe more focused on my personal experience. One of the things that I've learned is that I need to be more dispassionate about my trades. And so if we think that this is the right, logical, objective decision, then I think that we should go for it. We have some ground to gain.
So we're going to buy the British pound against the US dollar, right? And you're going to do that at 126.17.
Okay.
For 0.5 pounds per point, or 50 pence a point. Should we go ahead and lock that in?
Let's do it.
They're moving the market against us already. Look, it's about to go 126.20 bids. There we go. Right, so we're long a bit of that. Now, the other thing that's had a huge move, and we can have a look at treasuries and the bond market.
Okay.
Right, so you've got corporate bonds and you've got sovereign bonds. And sovereign bonds are how governments finance their budgets.
We're doing national bonds, not like local government bonds.
That's
that
exactly,
right?
yeah. US treasuries. So the one that I'd like to take a look at is the 2-year, right? So that is an average of the predicted interest rate path over the next 2 years.
Okay. If we look at the previous time, which again, like stocks, doesn't necessarily tell us what's going to happen in the future, but the deficit did increase.
That's right. So it's not just drill, baby, drill. It's spend, baby, spend.
Yeah.
Right. Now 2016 was a completely different scenario, right? We had absolutely no inflationary pressure at all. If anything, and if you think of inflation like a balloon, if anything, we really needed to pump some air into that balloon. The economy needed some real push. At the moment, right, we've just come from that balloon being at breaking point, and we're just starting to get the pressure released. Right, so this is from September. Now, the US economy is strong, and it's been extremely strong. And beyond belief, really, we thought high interest rates would cause higher unemployment and a growth slowdown, and it hasn't happened. So even though we saw rates come down by 50 basis points from the Federal Reserve, now the concern is that we're going to get inflation come back into the system, and we're going to get sustained economic growth. We're going to get sustained low unemployment. So Jerome Powell came out on Thursday night and he said, I don't know if we have to cut interest rates by as much as we thought we would. So you can see what's happened over the past month. As bond prices go down, and this is the main thing I want you to take away from this today, Pega. Bond prices are the inverse of interest rates.
Okay.
Right? So if you wanted to turn this graph on its head, this is interest rate expectations going higher. So that 2-year interest rate is now 4.3%. Now that was under 4%, right, before all the election and such like. That's because expectations in the future were so low and that we would get a lot of interest rate cuts. Now we're not expecting as many cuts, so that expectation has risen. Am I doing that? That would be that way. Yeah, there we go. That's better. So this was about a month ago where interest rates were going to go to.
Okay.
But that's gradually risen because of Trump spending, because of how strong the job market is, because of how, the potential for inflation to come back in. So as the expectations of interest rates have moved higher, the bond price goes down.
The bond price goes down, and so the yield, which is the money that they give you,
exactly,
goes up.
Goes up.
Right? Yes. So it was below 4, and now it's over 4. So I'd get more in my sort of like dividend coupon.
That's exactly right.
Okay.
Let's just have a look. So we're doing 2 contrarian trades here, right?
Okay.
So if we buy 0.5 of that, so again, 50 pence a point, the same size, that gives us a notional of just over 5,000. So the same as the positions we've been taking on everything else. Now, bonds tend to move a lot less. So how would you feel about increasing the size of this one?
To more than 5,000.
That's right.
Well,
Because the beta
yes.
is a lot lower than stocks, for example.
Okay.
You happy with that?
I'm happy with that. So
Right.
would we do
Permission.
10?
We'll do exactly 10,000.
Okay.
Right, so we'll go ahead and lock that in. 10266.8. We're buying you some bonds. We'll go back to your portfolio now and we'll see where that leaves us. Having bought GBP against the dollar, having bought the treasuries, you can see that now. Those two are in there. And yeah, fingers crossed, that is going to help the portfolio.
Okay.
Now, position management. We said that there are certain times that you want to get to that stop loss level, right? And not want to, but you want to have that stop loss. So if you get there, and we would have stopped you out of Delta a long time ago.
Yeah.
However, the other option is if you still think something's the right position, the correct position, and it's gone way too far. Now, a reminder, Delta has moved 24% against us.
Wow.
Right? 24% Delta has gone up against us. How would you feel about increasing the size of the position there? So let's have a look at the daily chart, right? That is the thing that you've been short, and we've been short from here. What about we increase the position and we go more short here?
Well, I would have waited until maybe we saw a slightly better result. But again, I'm going to be dispassionate. I'm going to think logically. And
you don't have to, just because I'm suggesting it. This is a very brave thing, right? And I'm not saying that this is the right thing to do by any means, because this trade's been shocking so far.
yes.
Right? And this is the one that would be keeping you up at night. Do you want to increase the risk in something that has, been so bad so far?
So I think that some of the decisions that led us to short Delta were maybe in the early stages about personal experience rather than the PE ratio and some of the lessons we've learned since then.
That's right.
And I think if this was an elaborate game of poker, I probably would have folded. So I think what I would do is I wouldn't double down, because while I think that there were some good, sorry?
That's the response I wanted. Well done. We're not allowed to high five because it goes across the screen, but you deserve a high five for that
Thank
one.
you.
Very disciplined. That was a test, Pega, and you have passed with flying colours.
Excellent.
Therefore, you're allowed to come back next week. Would you have time to come back next week?
Yes, I'd love to come back.